Good morning, this is WION Wallet. I'm Sumit Chaturvedi. Let's go straight to our top headlines. Microsoft co-founder Bill Gates once again tops the Forbes Magazine list of world's richest billionaires, while US President Donald Trump slips more than 200 spots. Britain is all set to exit European Union as the British Prime Minister Theresa May will trigger the process next week. Idea Cellular has approved its merger with Vodafone India to set up what could be the biggest telecom operator in India. And country's largest mobile network operator Bharti Airtel and latest entrant Reliance Jio are at war over the question of internet speed. Now straight to our top story. Microsoft co-founder Bill Gates once again topped the Forbes magazine list of world's richest billionaires, while US President Donald Trump slipped more than 200 spots. Well, the magazine has said that. Gates, whose wealth is estimated at $86 billion, led the list for the fourth straight year. He was followed by Berkshire Hathaway chief Warren Buffett among the top 10 billionaires, a group heavily dominated by Americans, many of whom work in the technology sector. Buffett's wealth was estimated at $75.6 billion. Others in the top 10 included Amazon founder Jeff Bezos at number 3, Facebook creator Mark Zuckerberg at number 5, and Oracle co-founder Larry Ellison at number 7. Trump himself slipped 220 spots on the list to number 554 with an estimated $3.5 billion of wealth. Forbes attributed Trump's drop to sluggishness in the Manhattan real estate market, which is responsible for a disappropriate amount of his wealth. News from UK, where Britain is all set to exit the European Union as the British Prime Minister Theresa May will trigger the process next week. According to Theresa May's spokesperson, she will officially notify the European Union that UK is leaving the club on March 29. The British PM will move Article 50 of Lisbon Treaty and make a statement in the House of Commons, finally setting in motion Britain's formal departure from the European Union. Reports quoting Downing Street sources have also confirmed the same. The move will begin a 2-year negotiating period in which the British government and the EU hope to agree on the terms of Britain's exit and reach a separate deal on the shape of their future relationship. Now back to India, where India is emerging as a preferred investment destination. While the country is expected to witness nearly $4.2 billion new capital in the realty sector in 2017, says the Cushman and Wakefield report. According to a report titled The Great Wall of Money by the global consultant, new capital available for global real estate investment in 2017 is estimated at $435 billion, out of which India is expected to get nearly $4.2 billion. Well, the report states that the total global wall of money in 2017 has fallen by 2% compared to 2016's peak of $443 billion, but is the second highest figure recorded since 2009. The report also mentioned that in Asia Pacific, which accounts for 30% of the global volume, China, Japan, Australia and Hong Kong ranked in the top 10 target investment destinations globally, with Singapore and India few spots behind at 12 and 15 respectively. While the growing investment interest in Asia Pacific reflects the maturity and growth of opportunities across the region as well as the prospects for attractive returns, the report stated that. Now to the auto space, where PSA Group, a French automaker that owns the Peugeot, Citroën and DS brands, is targeting to bring in a series of smart cars to India. It will launch the first product in India by 2020. The segment of focus for PSA's entry in India will be an SUV-inspired hatchback that will compete in the Maruti Suzuki Swift segment. India is again on PSA's radar as it is the fastest growing market. The Indian auto industry is predicting double-digit expansion in passenger vehicle sales this fiscal year, and PSA is willing to tap on this opportunity. PSA isn't just eyeing the entry segment, the biggest terms of unit sales in India, rather it is targeting to bring in a series of smart cars. According to reports, the first product could hit the Indian road in 2020. Now, around 8,500 crore rupees of capital infusion in 10 weak public sector banks in the current fiscal year by government under the Indradhanush scheme is based on their aim to meet, restrict and the rigid milestones of the scheme, which also includes raising capital from other sources and reducing employee benefits. This means that getting capital for banks from Indian government will not be that easy. They will have to meet many norms. Well, the conditions for bank recapitalization include active bad loan management, fundraising from markets, selling non-core assets and shutting money-losing bank branches. Under the Indradhanush scheme, the government will infuse 70,000 crore rupees in PSU banks over 4 years, and they will have to raise a further rupees 1.1 trillion from markets. Indradhanush plan is more of a bailout capital in nature. Due to demonetization on operating expense shot up and margins took a hit of the banks. Therefore, it became difficult for the banks to meet the capital requirement ratios, and that's why such scheme has been announced. But after the announcement of such schemes, banks will have to meet the strict criteria set up by the government as well. Now, news from the petroleum sector, where state-owned ONGC has signed definitive agreements to buy out debt-ridden Gujarat State Petroleum Corporation's entire 80% stake in KG Basin natural gas block for $1.2 billion. The company will close the deal and pay GSPC the money after regulatory approvals like government's go-ahead for transferring of participating interest and change of operatorship are secured. Jubilant Offshore Drilling Private Limited and Geo Global Resources, they hold 10% stake in the block too. The cabinet has cleared 4 supporting GST legislations, paving the way for their introduction in Parliament as early as possible. The 4 supporting legislations, the compensation law, the central GST, integrated GST and union territory GST, would be introduced as money bills. The GST legislations were the only agenda in yesterday's meeting of Union Cabinet chaired by Prime Minister Narendra Modi. The 4 legislations would be taken up for discussion together in the Parliament. Once approved by the Parliament, the states would start taking their state GST bill for discussion and passage in the respective state assemblies. The GST Council in its previous 2 meetings had given approval to the 4 legislations as also the state GST bill, while the SGST has to be passed by each of the state legislative assemblies. The 4 other laws have to be approved by Parliament. Passage of all the legislations would pave the way for introduction of goods and services tax from July 1st this year. The government is hoping the CGST, IGST, UTGST and the GST compensation laws will be approved in the current session of Parliament. Now back to some global news, where Japanese Prime Minister Shinzo Abe said the European Union and Japan should reach an economic deal very soon. Abe stressed on the importance of free trade to Japan. He also highlighted the importance of innovation and stated it allowed Japan and Germany to have shown impressive growth despite not having a large territory of natural resources. German Chancellor Angela Merkel, after speaking with Abe, said she was in favor of free trade and open markets.
だからこそそこを高らかに示すため、日本と EU の EPA を早く結ばなければなりません。これからの私の訴えであります。私たちをここまでにしてくれた自由で開かれたルールに基づく体制を守り、強くしていくため、メルケル首相とともに歩んでいこうではありませんか。人類の歴史に大きな節目が訪れました。
Wir wollen freie, offene Märkte, wir wollen natürlich fairen Handel, aber wir wollen keine Barrieren aufbauen, sondern in der Zeit der Vernetzung der Dinge wollen wir erstmal auch unsere Gesellschaften miteinander vernetzen und fair miteinander kooperieren lassen. Und das ist der freie Handel.
Now, the rupee's outpour and a banking system flooding with funds will persuade RBI to change its focus in its next month's policy review. The Reserve Bank of India, or RBI, may consider raising the cash reserve ratio for the first time since 2010 if deposits accumulated due to November's cash ban don't flee over the coming months. The rupee has gained about 2% last week after PM Modi's clean sweep in state election. According to reports, banks are holding nearly 5 trillion rupees of surplus cash, which has limited RBI's ability to buy dollars and curb rupee gains to avoid further increasing liquidity. Dollar buying will boost rupee liquidity at a time when India's banking system is already flooded with cash, thus threatening to stoke inflation and jeopardizing RBI's monetary policy. Now straight to our today's special on telecom wars in Indian market. Well, Idea Cellular has approved its merger with Vodafone India to set up what could be the biggest telecom operator in India.
I would say in a simple way.
According to the merger, Idea will hold 26% stake and Vodafone will hold 45.1% stake in combined entity. Now, Vodafone will transfer about 4.9% stake to Idea's founders under the deal. Reports suggest Vodafone India will have implied enterprise value at $12.4 billion and Idea at $10.8 billion. Idea Cellular and Vodafone promoters will have rights to appoint 3 directors each. Idea will have sole rights to appoint chairman of the combined entity.
So it gives me great pleasure in announcing that the Aditya Birla Group and Vodafone Group PLC have reached an agreement today to merge the operations of Vodafone India with Idea Cellular. This merger of the current number 2 and number 3 telecom operators in India will create the country's leading telecom service provider. The combined entity will have a customer base of nearly 400 million, will command a revenue market share of 41%, and a customer market share of 35%.
We are very complementary. I would say in a simple way, Idea is strong where Vodafone is weaker. Vodafone is strong where Idea is weaker. This is an excellent opportunity to give wonderful experience everywhere, not just in some places. Provide unlimited voice, which is now the norm in the market, but also a big amount of data.
On one side, merger is happening, but on the other side, the wars are brewing in the telecom space. The country's largest mobile network operator, Bharti Airtel, and the latest entrant, Reliance Jio, are at war over the question of internet speed. Days after Airtel released a new set of advertisements claiming it has been officially declared as the fastest network, Reliance Jio sent a legal notice to the company for what it alleges to be misleading and incorrect. Airtel responded by claiming that the network has been declared as the fastest network by the Ookla, the global leader in broadband testing and web-based network diagnostic applications. Jio, in their legal notice to Airtel, claimed the same agency had declared Jio as the fastest network in Q2 and Q3 of 2016, and the methodology of the agency was flawed. Mukesh Ambani-owned Reliance Jio has been at war with most of the incumbent telecom providers for what it calls cartelization to ward off competition even before its commercial launch. Established players like Airtel, Vodafone and Idea, on the other hand, had accused Reliance Jio of unfair business practice by offering free service to lure away their customers under the garb of testing its signals. Now, to talk more on the telecom war, why the telecom wars are happening, what is the future, what all it's going to be there, we are joined by our guest, Rajan Matthews, Director General of COAI. Well, good morning, Mr. Matthews. Well, thanks for talking to us. First of all, can you explain to us what is there in store for telecom subscribers because of this, as a result of this merger and war? Where are we headed?
So good morning and thank you. So I think this is a historic and bold move by both Idea and Voda. And I think the end result is going to be the consumer who is going to benefit. If Idea and Birla did not see revenue opportunities and market opportunities in the future, this would not have taken place. The consolidation means that they are firmly committed to India, and ultimately that is going to mean market-determined, experience-oriented success. So that ultimately is going to be good news for the consumer by way of value tariffs, by way of new technologies, and by view of a better network experience. So all told, I think it's going to be very good for the consumer.
Does it mean that tariffs will fall further, tariffs in calls as well as internet? Does it mean they will fall further?
So I think there will be good deals to be had. I guess there will be good value propositions made. Yes, data will be the new market-oriented push from all companies. And so some of the tariff matters are before the various judicial bodies like the Competition Commission, the Delhi High Court, and the TDSAT, which is a specialized court for telecom. So this matter of whether you can sell below cost, what is cost, how is cost determined, who is a dominant player, and who may offer discounting in the marketplace are all matters which will shortly be discovered and adjudicated in the legal process. So I think we should wait for that. But all told, I think consumers will still get very, very good value. For example, the 300 rupee plan that is offered by Jio and is matched by many of the competition is an excellent value for consumers and offers free voice, no roaming, and plenty of bandwidth on data, which presently is very affordable for just about everybody.
But Mr. Matthews, what about the quality of service? We heard some analysts saying that because of lack of margins in this business now, as the companies are bleeding, there is pressure on their books, the quality of service could get worse than this. So what do you say about the quality of service? Will it get better for the consumers, or will it become worse from here? Because people have suffered a lot as far as quality of voice and internet is concerned.
So we are in a transition phase when we are moving from an all-voice network to a combined voice and data network, and ultimately an all-data network, which is 4G LTE oriented. So in this transition, there will be a few hiccups, especially in the highly congested urban areas. But this consolidation is driven by the fact that going forward, increased investments will be required, and companies with deep pockets will be the ones that are going to be able to make the high investments required. That being said, one of the fundamental reasons for these types of consolidation happening in the industry is the financial pressures faced by the industry because of high levies and taxes from the government. 30 to 40% of every rupee earned by telecom operators goes back to the government. So I think this is an area that is going to have to be looked at by the government in terms of saying if the Honorable Prime Minister's programs of Digital India, Connect the Next 1 billion are going to happen, then the government must leave more money in the hands of private operators to invest and make customer experience better.
Fine. Thank you so much, Mr. Matthews, for talking to us. Here it was Mr. Matthews, Radhan Matthews, DG of COAI, who was talking to us on telecom sector. Well, telecom sector is going through a lot of troubles. We can say that changes. Yesterday, Idea and Vodafone announced their merger. They will become the largest entity in telecom sector in India. On the other hand, both parties, Jio and Airtel, are fighting with each other. What does it mean for consumers? What does it mean for companies? That's what we explained to you. For customers, this will lead to better service, better quality, as well as low tariff. For companies, this can lead to some kind of more pressure on their books, which will lead to more losses for telecom companies. So telecom sector will be a very important sector to watch out for in the coming few months. This is time for a short break at WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned. Welcome back to WION Wallet after the break. Let's go straight to our markets coverage, where Sensex and Nifty have opened in green as far as Indian markets are concerned. Though Asian markets were under pressure today, Sensex is up by around 35 points as we speak now, while Nifty is also up. It is trading in green and it is up by around 13 points. On the other hand, the global markets, Nikkei is down by around 64 points. So global markets, especially Asian markets, have been under pressure. Straits Times is under by 4.72 points. So that's the whole thing. Hang Seng is though up by 56 points. So we are joined by our today's guest, Vivek Karwa, financial planner of Riddhi from Chennai, to talk more about the markets. Well, good morning, Mr. Karwa. We have seen markets, Indian markets rebounding today. How do you see trade happening today? What is the main focus or outlook going to be as far as today is concerned?
In fact, last 2-3 days, the market has been in consolidation phase. And in fact, I think we spoke on last Friday, and I was of the opinion that there could be small consolidation to a small correction also, because markets have rallied a lot already. So we saw a small correction yesterday, and overall last 2-3 days there has been consolidation, and I think this consolidation would continue today also. We are very, very flat today as well. And I think until there is some other big trigger, either there has to be a big selling from FIIs. In fact, FIIs have been buying right now, and that is giving the stability to markets. So next 2-3 days could be again a consolidation phase until a big breakout happens, either on downside or upside.
And Mr. Karwa, what about the telecom sector? Telecom sector is going through a lot of ups and downs. So how do you see telecom sector after yesterday's deal? We saw Idea jumping, later on coming down. How do you see stocks from this particular sector as far as Indian market is concerned?
In fact, I was speaking on one of your sister channels, and I was very firm on opinion that Idea should not be bought at this 120 levels, 115, 120 levels when it was trading last week. See, all these companies are suffering, rather I should say bleeding due to debt. They have huge debt on their books, and at the kind of pricing war which is happening today's date, will they ever make money? That itself is a big question mark in everybody's mind. So as far as consumer is concerned, I think it's a gaga situation for him. Consumer would enjoy. You would get more cheaper prices also. But as a shareholder, I don't think you should be investing in any of these telecom companies right now. Even Reliance Jio has put lot of money into the business. But what I feel is recovering that money and making that money would be really difficult. It might take next 5 years to 7 years even for Reliance Jio to make that money. And finally, there would be 2 or 3 players left in India. And I think it's a tough situation. So don't invest in telecom.
Right. Mr. Karwa, what about the global markets, especially the Dow Jones and Wall Street, where Wall Street ended in a mixed tone because of the people they are expecting that Donald Trump's plan to cut taxes and boost economy will take time. What is your assessment of the global market, especially the American ones?
The global markets are also trading firm. In fact, US is, though Dow Jones yesterday was flat, it is still at all-time highs. We should keep that in mind. And the sentiment over there in US also is quite positive, and that ripple effect is going to be seen across the globe. Further, if there is any tax cut in US, of course, US markets are going to rally, that is for sure. That would also have major impact on Indian markets. See, there cannot be a situation wherein US is taxing their companies at say 15 or 20% if a cut happens over there, and India continues taxing companies at 30% plus. So if I think Donald Trump should go ahead, cut taxes over there, and our government will have to follow suit over here. Otherwise, we will lose the competitive edge, and that would indirectly benefit the consumer, the corporate sector as a whole.
And what about rupee? Rupee has scaled 16-month high. Going forward, how do you see rupee behaving? Will it become stronger from here? What are the cues you're looking forward as far as rupee is concerned?
See, rupee is already the best performing asset class last 1 year. And there were big economists who said it is going to be it is a big blunder by demonetization, and that effect is actually showing in on the rupee right now. So rupee would say that one thing is very, very sure: 66 to 68 is an ideal range where RBI and government would think that rupee should trade in. Because below 66, it affects one either exporter or importer, and either side, 66 and 68, either exporter or importer. It affects both the sector as a whole. So this range would do, but rupee is finally, a country's currency is finally a precursor to what is happening in the economy and how strong the economy is going. So if India continues to go strong, I think RBI's intention and government's intention would be to depreciate rupee by 4 or 5% every year. But yes, there is pressure today's date, and it might strengthen further because FII flows are actually pouring in a lot right now. They have restarted rather.
Well, thank you so much for talking to us, Mr. Karwa, today. Here, our guest was talking to us, Vivek Karwa, financial planner with the That's all today we have for the viewers of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.